There are thousands of different funds out there, but how can you possibly choose which ones to invest in? And how do you learn about different areas within the fund universe in order to make informed investment decisions? For inspiration, our direct investment service preferred list can be a great place to start. It's put together by our experts here at Charles Stanley and designed to provide a helpful shortlist of fund options to choose from. But we want to take this one step further, which has led to the development of this series, where each month we're going to be learning about a different investment area with the help of some industry pros. So we're going to be exploring each of these fund sectors, diving into what factors to keep in mind about them, the impact of current events, cause for concern, and tons of stuff in between. So if you're liking what you're hearing, please do go ahead and like, share, subscribe to our videos, engage with us in any way that you see fit. And if you're super keen to learn about a specific investment area, please do let us know in the comments section. We're going to be kicking this off close to home with learning about the UK sector. So we'll be joined today by our very own Director of Asset Management, Chris Ainscough, alongside Jack Barrat, Portfolio Manager at Man GLG and Co-Manager of the Man GLG Undervalued Assets Fund. Chris, Jack, thank you both so much for joining me here today. I don't mean to brag, we do have ourselves an Oxbridge panel here, myself not included, of course. With that in mind, Jen's going to kick this off nice and easy for you. Chris, please do start off with a brief explanation of the UK sector. What's it all about?
Perfect, a nice easy one from me. So the UK sector really is funds that are looking to invest in companies generally listed in London. Now, if you go index-based, you're probably going to skew yourself more towards some of those stocks that people know, sort of larger energy companies, materials, mining, some of the pharma type exposures. And in the active space, you can be a lot more targeted within that, and you've got to be willing to go off index really to get the best out of the UK market, I think, and find some of those exciting names.
Jack, the UK economy is looking a little bit shaky as of late. Should investors in UK shares worry, and why is this a good place to invest?
No, it's a great question, and I think a natural skepticism. I appreciate there is a lot of worry out there at the moment. I think I'd start by saying that worry actually isn't necessarily being reflected in the data. The most recent employment data that we've got, what we're hearing from corporates as fund managers, we get to meet a lot of people running companies in the UK. Actually, almost universally, their experience has been slightly better than expected right now. And actually, I say that skepticism, that slight worry about the UK economy, in our opinion, might create something of an opportunity. Actually, when people are most worried, but that's not reflected in what we're hearing in the data and what we're hearing from companies, often creates a mismatch, which as active managers creates a great opportunity. I guess one thing I'd add to that is that if you were skeptical or worried about investing in the UK economy, that's very different from investing in the UK stock market. In fact, almost 3/4 of earnings in the UK stock market are outside the UK domestic economy. So it's not necessarily a view we would take, but if you were nervous about the UK, you could construct an entire active portfolio just of companies with overseas earnings. So the UK stock market is very, very different than just a bet straight on the UK market.
So Chris, the FTSE 100 has hit a key milestone of 8,000 points, although it has since fallen back. Is this significant? Why or why not?
I'd be really interested to hear Jack's take on this as well, but for me, I find these levels are sort of overhyped. I think people get very caught up on these round numbers, a retracement level, something that they want to point to, but really that's a short-term phenomenon, and they might be relevant over that short-term period just because people are watching them and using them as that sort of trading functionality. But over the long term, I don't think they are relevant. I think it's more about fundamentals, the businesses that you're investing in, all of the things that Jack was talking about around valuations and the likes, which are going to be the biggest drivers of markets. So I think they can be exciting and people like to look at them, but they're not something that I care about too much over the long term.
I would totally agree with that sentiment overall. I mean, we spend our time trying not to look at necessarily the share price graphs, but instead look at the fundamentals, really what's driving the earnings of this business over the next 5 to 10 years. And in an uncertain world, as you referenced at the start of this program, the opportunity to spend your time really trying to understand what's driving these businesses and whether the world has changed and the companies that will benefit from that is much, much more important, we feel, than necessarily looking at key levels like that.
The UK has been a little bit laggard over the past decade or so in comparison to other global markets such as the US. 2022 was a better year, although what do you think could drive performance from here on out?
It's true. I mean, over the last 10 years, we have seen massive US outperformance. And I think that's been in the environment that we've been in with sort of low or falling interest rates, and that's really propelled those growth in technology shares that have been the biggest drivers in the States. Now, looking at the UK market, it hasn't had those exposures, so it has lagged, but as you referenced, in 2022, there's a bit of a change of fortunes there. We saw inflation kicking off, an energy crisis coming through, the concerns around Ukraine, and with interest rates rising and that sort of tightening of policy, a lot of those growth names suffered. So the UK market had a very good year in 2022, which was I guess, pleasing for the local domestic investor. And going forwards, I think it's going to be a little bit more balanced. So inflation is hopefully going to be behind us, and we're nearing that peak in interest rate sensitivity and sort of the rises that we've seen there. So now we can start to look through that and think, what's the growth environment going to be like? Where are the opportunities? As Jack referenced, an active manager in this market can really go and hunt for those now. So I think it's an exciting opportunity on both sides of the pond, and there's opportunities out there for all.
Chris, Jack, thank you both so much for all your expertise. This has been great.
Thank you for having us.
And thank you all so much for watching.